Okay, hey, it's 2 o'clock. Thank you guys for joining us. We do have 300 or 400 people on the line already, so let's get started. I appreciate everybody's time. We'll go for an hour. We might be convinced to go for a little longer than an hour if you've got some really excellent questions for us. But our format here is about a 20-minute slide presentation. We're going to try to give you a really clear understanding of the top 4 programs that the government has offered us in terms of COVID relief. So the top 3 or 4 programs that are out there right now. And then we'll go into a wide open, Wild Wild West Q&A show. And if you will put your questions in the Q&A box, we will try to get to them. So I already see some folks who know you and I, Steve, who are already piling into the Q&A box, and they have some really long questions already. So Lewis, Gary, Anonymous, thank you for your questions. We will try to get to those just as soon as we plow through the presentation. Please listen for your questions and answers within the presentation, because I think we've done a pretty good job of capturing everything that's going on right now. So we'll try to cover the basics. So today is February 11th. Just for my recording sake, we are recording this and it'll be available on the PPP Resource Center that's from DIY CFO. So we're going to go over these top 5 things today. The SVOG. If you don't know what these things are, don't worry. I'm going to get to them right away. The restaurant rescue, the ERC, the PPP 1 and 2. We're going to talk about those loans and how you can still get those loans. And then, of course, PPP Forgiveness. SBA debt relief is not on this list, but as we just mentioned, it does appear that there is more debt relief available. So why should you be listening to us? Just a real quick introduction. I'm David Worrell. Steve Milan, my wingman here. Steve and I started a company called Fuse CFO about, Steve, 8 years ago now?
8 years ago.
Oh my God. So 8 years ago. And we have a team of finance professionals in Charlotte, North Carolina, who are helping hundreds and hundreds of small businesses out with their PPP loan applications, their ERC applications, their forgiveness applications. And we are going to stay here on the bleeding edge of government stimulus. We are reading everything we possibly can. We're consulting with CPAs and lawyers. This morning we hung out on a tortuous hour-long SBA webinar just to see if we could glean the answer to one question, which of course they flubbed, but we'll get to that. And in the background, we are a hardcore, rock-solid accounting and CFO on-demand service. So if you guys need services beyond this, we specialize in QuickBooks. We have folks who know even bigger packages like NetSuite and SAP, but our hardcore services are for the $1 to $25 million revenue company, maybe a little smaller, maybe a little bigger, but it's those of you out there who own a business and really want to do a great job of keeping your books straight so that you can run your business by the numbers. So you get the data and knowledge out of your financial results that help you make business decisions. We like to say you can't make good decisions with bad data. And we're here to, first of all, make your data rock solid, to get those accounting systems in shape. And then to walk you around our wheel. See our wheel here on the screen? This is something that I'll give Steve credit for, man. This came right out of the tortuous mind of Steve Milan. and it encapsulates our slogan of making your business more profitable, more sustainable, and more fun to own, because it is no fun to own a business that's not profitable and sustainable. I've been there and done that, and I can tell you it's much more fun when you're making money and you know what your numbers are and you know what you got to do to be more profitable. So that's enough about us.
David, just one quick housekeeping suggestion.
Sure, yeah, jump in.
It'd be better if everybody posts your questions in the Q&A box rather than the chat box.
That's right. That's right. And Brandy, those are full payments. The SBA debt relief program is 6 full payments for anyone who has a loan. But the rules on that one are still being developed. So with that, we're going to close the chat box and ask you to put the questions in the Q&A. Okay, jumping right in, guys. First of all, we're going to start with something that probably doesn't matter to anybody on this call, but I want to be dang sure because this is the biggest opportunity we've seen. This is the SVO, the Shuttered Venue Operator Grant. And it is a grant. It's not a loan. This is money that you get to cash in on immediately. And it's only available to these 5 categories of six categories of businesses. You must own or operate a live venue or own or operate one of these related businesses. And to know whether you have a live venue or not, you have to have chairs bolted permanently to the ground, affixed to the floor. Chairs affixed to the floor is the official definition of a live venue. And so from that, you can take it on. I think you can understand the rest of this. You could be a theatrical producer, even a museum, zoo, or an aquarium if you meet certain criteria, a talent rep, a live performing organization operator. Now, oddly, maybe on purpose, this does not say musician or artist of any kind, but rather those folks who are in the industries of supporting and highlighting artists. So if this is one of you, if you are one of these, please be familiar with the SVO, the Shuttered Venue Operator Grant. Watch for the rules as they are developing. Call us, we can help you out. This is big money. This is 45% of your 2019 gross revenue. If you are a $10 million concert hall, you stand to get $4.5 million granted to you overnight as soon as this is available, and the gears of Washington are moving a little bit slowly. But anyway, it's a $15 billion grant pool of money, and the maximum of $10 million means that there might be as few as 1,500 of these loans. Now, I expect there will be 2, 3, 4 times that many, but we're looking. The government is looking for those museums, those concert halls that are really, really hurting and just haven't been able to open for the last year. You do have to.
This is going to be a huge benefit to a really hard to hit industry. It's not. We should mention maybe that it's not. Applications are not open yet. We're watching every day, and as soon as that comes out and we get a little more definitive information, we'll put that out there. That's
right. And these are the only criteria we know of now, is that you have to have been open by February 29th of last year, and that you cannot take the PPP 2. Okay, so you can't receive a PPP loan after December 27th, which is the date of the Economic Aid Act. So basically that means PPP 2. Okay. This is brand new. You won't see this anywhere else, anywhere online, anywhere else, because nobody's brave enough to tell you, because it doesn't exist yet. But I'm not making this up. There's another $25 billion. I'm calling it the restaurant rescue, and it doesn't even have a name yet, but it's in the Biden's relief proposal, which has passed the Senate and it has passed a House panel. I don't know my way around the House of Representatives very well, but there are panels that vote on these things, and the panel just agreed to pass Biden's relief bill, including the $25 billion for a restaurant rescue portion of it. And we'll see whether it survives reconciliation. But Nancy Pelosi came out today and she said the way she sees this working, it will not be delayed by the Trump second impeachment trial. And she believes it has good chances of becoming law by March 15th. So that's 4 weeks from now, we could have a whole nother bill to study. Are you ready for that, Steve? Oh man. Yeah, I have to do some calisthenics before I do the $25 billion restaurant rescue. Okay, ERC. This is probably what everyone's waiting to hear about. And what we really want to emphasize is the most important stimulus money available today. And it takes the most planning. You know, if you thought PPP was complicated, I don't know. This is a close second place to the complexity of PPP. So we're going to take you through it one at a time. I know I talk fast. I'll try to slow down a little bit here. But here's why you should care about the ERC. There's a potential benefit of $19,000 for every employee in your organization. And that breaks down as half of their wages up to a credit of $5,000 for the wages you paid them in 2020. 70% of their wages up to a credit of $14,000 in 2021. And this applies to all of their wages. Well, so you can see 50% of wages up to a credit of $5,000 technically means there's a cap of $10,000 in wages, right? So there's some more details we'll get into here. But if you had 100 employees and you got all of the credit that you possibly could out of this bill, you could get $1.9 million. $1.9 million. That's really right on par with PPP and maybe even a little bit better. Yeah, it's a lot better. We had 20 employees and we got 185,000. So yeah, it's like twice as good as the PPP. All things being equal. There's a lot of complexity. Maybe I shouldn't even try to draw an equivalence there. So first thing to know is there's no limit on employees, no limit on the benefit that you can get from this thing. You do, however, have to qualify by showing a revenue decline in at least one quarter compared to that same quarter in 2019. And when I say one quarter, I mean one quarter in 2020 or one quarter in 2021. We're going through the first and second quarters of 2021 at least. So if you can show a revenue decline of, what's the percentage, Steve?
25%?
25%.
Oh, I'm sorry, we're on ERC.
We're on ERC. 25% was the PPP. 50%,
So
right?
2020, it's 2020 is 50%. 2021, it's 20%.
Oh, that's right. This changes also. I'm glad you caught that. Okay, so that's why I didn't put the percentage in the slide, because it's going to change, and I'll talk about that in a second. But if you can show a revenue decline in a, let's say, third quarter of 2020 versus third quarter of 2019, you might be eligible. Likewise, first quarter of 2021 versus first quarter of 2019, you might be eligible. Even if you cannot show that, even if your business is doing better than 2019, believe it or not, you can still get $10 million from the government if you can demonstrate that you had a suspension of business because you were observing the regulations that dealt with COVID. And that's a big question mark, exactly how you prove that. Some people will have a real easy time proving that they were impacted by regulations. Some of us maybe not so much, so we'll talk more about that. The ERC did not used to be compatible with the PPP. And most of us on this call, most of the people I've talked to and that Steve and I are working with have a PPP. So we hadn't had to talk about this before. Now it's okay. If you have a PPP, you can apply for the ERC. But you're not allowed to double count wages. So if I take $10,000 in salary and I apply for a PPP that covers all $10,000 of that salary during my PPP covered period, then that $10,000 in salary cannot be used to count towards an ERC tax credit. If they're in different periods, it's different payroll, different dollars being used to pay me. I can take a PPP in quarter 3 to cover my wages, but in quarter 4, I have wages that count towards ERC. Perfectly fine. So a lot of juggling and strategy involved in this. In any event, don't double count wages for both programs, but they are compatible. The ERC is granted to you based on how you fill out the 941 quarterly payroll tax forms. Everybody with payroll fills out a 941, whether you know it or not. Your payroll company submits these quarterly, and there is a way to request the credit on those forms. And finally, and this is really important, the ERC is a refundable payroll tax credit. So think about your normal tax credit. You give $50 to charity, you get to write $50 off of your personal income tax or reduce your income by $50. This is different. This is a refundable payroll tax credit, means that if your credit, if the amount of credit you earn by paying payroll exceeds the amount of tax you pay, guess what? You get the cash back as a check. So ERC, Employee Retention Tax Credit, is a refundable payroll tax credit that will result in a check being mailed to you for the difference between 50% of your people's wages and the amount of FICA and FUTA that you would have paid on their behalf. And that's a huge, huge number for almost every business out there. So how do you think about this? There's a lot of moving parts. I think there's just three pieces you've got to think about. Number one, are you eligible? Did you have a 50% decline in your revenue? Or can you prove that you were at least partially shut down? Again, we'll drill down on that. The revenue decline is 50% in 2020. The revenue decline benchmark is only 20% in 2021, again, comparing to the same quarter in 2019. So are you eligible? Did you meet any of those criteria in either 2020 or 21 or both? Then if you're eligible, you have to think about how many employees do you have. If you have fewer than 100 employees in 2020, you get to claim all of their wages up to $10,000 per person, right? But anyway, all of their wages count towards this. In 2021, it's 500 employees. If you have fewer than 500 employees, all wages count towards the tax credit for a maximum credit of $5,000 in 2020 and $14,000 in 2021. Larger than the 100 or 500 number, if you have employees more than that, you are not qualified to apply for the, let's call it the full wage credit. You have to use what's called the stagnant worker wages only. That means you paid somebody to go to work, to sit at a desk and do nothing. Maybe you paid them to sit at home and do nothing. I expect that will also qualify. But the way the American Institute of CPAs has defined it, they're hoping that it's called stagnant worker wages, and that it will be, you paid somebody to come in knowing that there was nothing for them to do, and they mopped the floor and sorted the mail instead of doing their regular job. So for really large companies, greater than 100 employees last year, greater than 500 employees this year, you can still get an ERC benefit if you paid people to not do their principal job description. And finally, if you are still qualified, then you calculate the qualifying payroll for the quarter in which you qualify, thank you, and all following quarters until your revenue returns to 80% of 2019 levels and the end of the quarter in which it does that. Now, if that's not confusing enough, we put together one more slide that maybe Steve can walk you through while I take a sip of water. And this is just a quick overview of everything we've already said. So bring it home for us, Steve. Put this all together.
So this really is just a recap, right? So, and the rules are different in 2020 and 2021. I guess you can't see my pointer moving back and forth.
No.
So in 2020, the credit percent per employment is 50% of wages paid up to 10,000. 2021, that goes up to 70%. The maximum credit per employee in 2020 is 5,000 for the full year. In 2021, it's 7,000 per quarter. And at the moment, that's been authorized for the first 2 quarters, so $14,000 in 2021. The period during which you have spent wages, in order to qualify, the wages need to have been spent between in 2020, March 12th and December 31st. So end of the first quarter and on the next 3 quarters. 2021, it's been authorized for the first 2 quarters so far. In order to be eligible to get the loan in 2020, you need to show a 50% decline in revenue or this vaguely defined impact from being shut by regulations. In 2021, that drops to 20%. So, and then as far as headcount, the limit or changeover point, the inflection point, is 100 employees to get credit for full payroll. 2021, that goes up to 500 in order to get credit for full payroll instead of just the stagnant wages. So big picture, 2021, more money, easier to qualify. If your business at all may meet any of these qualification criteria, you should reach out to us at the email in the chat box or on the final slide or something. I'll put it in the chat box.
Great. So this is a good spot to stop and take some questions from the audience because we're going to move on to PPP loans in a second, but there's a lot of ERC questions already. Let's take 5 or 10 minutes and do that. Here's a really great one, Stephen. You know I think you'll know the answer to this. What if the business was not in force or operational until the first quarter of 2020? Let's say January 15th. How would they treat that?
And is this for to second draw?
No, so ERC. Sorry, just for ERC.
ERC.
Yeah, we're just talking about employee retention tax credit here. We'll move on to PPP later, but I think these are ERC questions. So what happens can you get an ERC if you were not in business until January of 2020?
I don't know. I hate to give answers like that, but I just don't know.
Okay. I thought I did know, and then you reminded me that I don't. So you're right. So there are still some rules to be applied here. I think that you can. I mean, the point is not when you were in business. The point is, when did you make payroll, right? When you agree that this is based on actual payroll. We haven't seen any rules that say you have any kind of look back period or any other qualification. It's simply, were you an employer submitting a 941 form during the affected period? So the best we know now, Lewis, thank you for that question, is that
I think that's a good answer. Unlike the PPP loan, which has very specific rules about when you started business, I haven't seen anything in ERC that suggests that.
Right, very good. Bruce has a good question for ERC. If the PPP funds are also used for other qualifying expenses, do those expenses still reduce your wages for ERC? I had a $20,000 PPP. I spent $8,000 of it on rent and $12,000 on payroll. How do I think about that? So, great question, Bruce. And the honest answer is there has been no guidance on this yet that we have seen anyway. It's a big ass question. Again, the American Institute of CPAs, who I rely on these guys, not because I'm a CPA, I'm actually not, but they have the ear of Congress. And so, I just bring them up because they often guide the laws as they're being made. So AICPA says that they expect it will be only the fraction of payroll that actually offsets the PPP, that you actually use to get PPP forgiveness. That money is off the table. Whatever's left is available for ERC. So Bruce, in your case, you claimed $12,000 of wages. Those $12,000 are counted towards PPP. If you have another $50,000 of wages, that money can be used for ERC. So good question.
And we haven't seen any guidance on how you delineate, demarc, or document what wages were used for PPP forgiveness and what wages were used for ERC.
Yeah. Steve, I truly do not know the answer to this one, but Natasha wants to know if 501c6s qualify for ERC. I'm just going to go back again to, did you file a 941 form? But it might be more complicated than that for a nonprofit. Have you seen anything about that?
I, again, don't know.
Yeah, sorry, Natasha. The guidance is still coming out on that, so you'll have to tune in next time when we have one of these things, and we'll try to find out for you. Again, guys, so much of this is developing. We are not afraid to tell you when we don't know, and there will be things we don't know, and we'll dig back in and find out next time. Let's see. Could you clarify double counting wages from Gregory? I think we got that, Gregory, but you can't count the same dollar of wage for both programs, right? Both the ERC and the PPP, whether it's one or two or whatever. You also can't use wages for the ERC that have come from any other source. Like there was this thing called the FFCRA Family Leave Coronavirus Paid Sick Time hokum last year. Hokum, that's a technical term. And if you used government money to pay sick time, the taxes that are due on that PTO, that paid sick time for COVID sufferers, COVID victims, does not count towards the ERC. So there's lots of little niggling things that you have to subtract out. We do have a little calculator. I hesitate to even call it a calculator. Let's call it an organizer to think your way through the ERC. And that was on the invitation that you got to sign up for this email. There was a link to download that organizer, and it does take this double counting thing into effect. So thank you, Gregory.
And David, we should say by word of explanation about our less than full understanding is that the ERC has been around for more than a year. We've been around for a year, but we haven't worked on it because PPP applicants couldn't get it.
That's right.
So there are other people who do know lots about it, although the regulations about what happens for people who weren't eligible before and are eligible now, there's a lot of lack of guidance there. But we have partnered, we should say, I think we have partnered with the firm who's been working on this for a year, knows a lot more about it. If you think you might qualify, drop David a note and we'll connect you with them.
Yeah, that's a good point. A quick little shameless self-promotion here. David at DIYCFO.biz. That's .biz. I'll have my email address. Steve, maybe you can put that in the chat box for me.
Yeah, I did.
Okay, very good. You're welcome to send me any kind of questions or emails. Anything we don't answer today, you can drop a line in there. I'll do my best to answer. And if you need help with your ERC, we've got a slide on what to do, but that's one of the things you can do. Let's take this question from John Johnson. He says, can a sole owner of an LLC qualify for ERC? I don't have any employees, it's just me. And so, John, I'm going to come back to the 941 form is where you get this tax credit. So if you're paying yourself wages, yes, that would be an S corporation, an LLC that's filing taxes as an S corporation. And you would know that because you pay yourself a W-2 wage, right? An actual paycheck. And somebody is submitting a 941 for you on a quarterly basis. But if you are not an S corp, if you are a sole proprietor, you're not filing FICA and FUTA. You're paying what's called self-employment taxes, and this is not a self-employment tax credit. For better or worse, business owners get screwed one more time. small sole proprietors get screwed one more time. Sole proprietors were eligible for PPP loans, but that's not the case for an ERC, the way I understand it. Okay, the last ERC question for us leads us right into the next slide, which is, there's a couple of them here. Let's see. Anonymous says, does a government mandate that has resulted in dining rooms closing, does that count towards eligibility? So glad that you asked that. Let me go to the next slide. What is a suspension of business? So remember, for ERC, you can qualify by having a down quarter, by your revenues are down by 50%, or you can have your business suspended. And here's what the law says. Your business was fully or partly suspended during the calendar quarter because you were following orders from an appropriate governmental authority which limited commerce, travel, or group meetings. Now, boy, what is a government order? Well, such as a governor or mayor saying all non-essential businesses must close. That's obviously a government order. An emergency shelter in place for non-essential employees. That's a government order. A curfew, government order. A stay-at-home order, I've just learned, is not a government order. Steve and I are under a stay-at-home order from our county health services. Is that who Gimbal is? County health, I think it's
PB Harris, Mecklenburg County Health Department.
Health Department. So the Health Department issued a stay-at-home order. That does not have the effect of law, the full force of law, doesn't count. They gave us some case studies to get your juices going here. They said, imagine a scientific business that has a laboratory where people are mixing vials and making stuff bubble over and formulating new things. And in the office next to the laboratory are a bunch of people who are coding software. And then you get a shutdown order where the business is non-essential and the people have to go home. The coders who are working at home can continue coding at home. The laboratory workers who rely on coming into the clean room or the laboratory, they cannot work. That's clearly a partial shutdown, right? And that's they call it more than nominal impact on the business. So if that laboratory was more than a nominal part of their business, then that would qualify as a partial shutdown. So you can imagine a restaurant who has to close its dining room absolutely is impacted. They give some other examples: the laboratory, the restaurant. Oh, the grocery store that stays open 24 hours but hits a curfew to close at 9 o'clock, impacted. This is an interesting one though. The grocery store that's open 24 hours and it can fit 700 people in the grocery store, right? Costco with 700 room for 700 shoppers, but then the governor says no more than 50 people in any retail location at one time, so they have to have a line out the door for 50 people to come in at a time. Guess what? The IRS says that is not an impact. That is less than a nominal impact on your business because you were still open, you still had shoppers in there. The fact that people were waiting at the front door instead of milling around in the toilet paper department is not an impact. So you can see that this is going to be a call. You're going to have to make a judgment call on whether you were significantly impacted, and you're going to have to back that up with some documentation and an argument to an auditor if somebody ever questions you on that call. I think we have one more slide here. So how to get your ERTC. First of all, remember this is a payroll process, so check with your payroll company. You can amend your forms from your 941 forms from 2020. So most of us who got the PPP are now told, hey, 2020 is available for you. We've got to look back and file what are called 941X, 941 amended returns, a 941X. And at the same time that you're calling your payroll company, you can say, hook me up for 2021, man, because it ain't looking good. I'm going to have a 25% revenue decline in the first or second quarter. I want to be ready for that, and I want to be capturing the employee retention data so that I can get that tax credit. Absolutely. No, I don't care if your business is doubled. I think you should be asking your payroll company to start capturing this data because you just never know, and it's so much money that you don't want to have to go back and try to recreate this in the past. So get registered for 2021 with your payroll company. I'll tell you our experience calling our payroll company. We called QuickBooks Online, and they went, "What? Did I do that right? What?" They said, "We don't really know how to do this yet either. We'll do our best. Please call back in 6 weeks." And I think that's where we are. Now, they did register us for 2021. And by the way, when they did that, they screwed up our chart of accounts and our synchronization between QuickBooks Payroll and QuickBooks. Everything went haywire. But at least we believe that they are counting us for 2021. And if you don't want to wait for the new rules, you don't want to figure it out yourself, and your payroll company ain't giving you the love, then consider hiring a specialist like us. We're happy to help out. We've got a lot of firepower behind us. One of the largest CPA firms in our region, who has done hundreds of these things over the last year, is going to be at our beck and call. So send me an email, david@fusecfo.com or david@diycfo.biz, and I will be sure to connect you and get you started on calculating your employee retention tax credit. Okay, anything else you want to say about ERC before I flip to PPP, Steve?
No, I just echo your sentiment about 2021, regardless of how well things are going right now. You just never know.
Yeah.
These are such uncertain times. Absolutely, I would register and start tracking 2021 so that if it turns out you're eligible, you'll easily be able to capture that, and it's a lot of money.
It is a lot of money. And speaking of that, Timothy had a good question. He wants to know, is it taxable? So he says, once you take the ERC tax credit, is there any kind of add back to your income? We had that question this morning, and the answer, Steve, is
not taxable.
Not taxable. Tax credits are not taxable. Thank you, Timothy. Okay, with that, let's jump into PPP. What's old is new again. It's my theme for PPP because you knew the PPP back in 1999. Back in 2020, this came out as PPP. We're now calling it PPP 1 or first draw. And that's because last month they created the PPP 2, which is called second draw. Now, before we go any further, let me say, if you didn't get the first draw, you still can. And you have to get the first draw because first things are always first, right? You can't have seconds until you have firsts. So if you haven't done this yet, what you're looking for is the PPP first draw. It's really only different in name only, but some of your banks do have 2 different portals or 2 different websites to go to. So just make sure that you know which one you're actually applying for and which one you're actually talking about. Okay, a quick update on how you use the PPP money in order to get it forgiven. Remember, it's a loan at first. It turns into a grant when the SBA forgives the loan. And to get forgiveness, you have to use it correctly. Well, there's been a few big changes in the forgiveness rules. Number one, it used to conflict with the EIDL grant, the disaster grant, it was called. It was up to $10,000, and you couldn't have both, and there were some weird rules about that. Now they are completely separated and completely compatible. You can have both. They do not impact each other. Lots of people complained about what was called the covered period, how much time you have to spend the PPP loan. First it was 8 weeks, then it was 24, but you couldn't have anything in the middle. Now it's a free-for-all. Anything from 8 weeks to 24. You have to take at least 8 weeks before you file your application for forgiveness. You have to pretend like you're spending it over in 8 weeks. Maybe you spent it on the first day, I don't know. But you have to wait at least 8 to file. And then you can have up to a total of 24 weeks to use all of the money in the prescribed manner and capture that as a qualified expense for forgiveness. The number of expenses you can claim for forgiveness has also expanded. It is, of course, payroll, but it also now includes a couple of other things I have a slide on. So that includes, they call it operating expenses and supplier costs, which is still a mystery, but we'll talk a little bit about that in a second. There's new eligibility criteria for the second draw PPP, and that is that your revenues have to have declined. I'm going to get it confused again, Steve. Revenues have to have been declined by 25% or more in 2020 versus 2019. So you can take any one quarter, and if you can show a decline of 25% in the same quarter of 2020 versus the same quarter of 2019, you will qualify for the PPP second draw. That's PPP 2. There's no change to the qualification for PPP 1. Everybody basically qualifies for PPP 1. Everybody with fewer than 500 employees, I guess it is. And finally, the big change that everybody's waiting for, PPP funds are not taxable and they're not included in any income calculations. So that when you're doing that 25% decline in revenue drop, don't count your PPP. That's not part of your income. Income is earned, right? PPP is a grant that's given to you. So you don't count it there, and you do not count the PPP when you file taxes. The advanced topic on that, one sentence for those of you who know what I'm talking about, PPP does increase your tax basis in your company, which is good. You now have equity in your company, but it does not get taxed before it goes into equity. Unlike every other dollar in the history of mankind that became taxable profit before it became equity, PPP does not. It flows directly to equity.
So David, just one quick thought on the revenue comparison.
Yeah.
If you were in business for all of 2019, then you can just line up the quarters in 2020 with 2019.
Right.
If you weren't, then there is some escape clause that no matter when you started, as long as it was before February
15th
of 2020, as long as you were in business by the cutoff date, there is some rule that will let you line up the quarters, and
that's right.
We have that in our calculator or somewhere.
That's right. In all of the examples that I give today, I'm going to take the easy way out and assume that you were in business for all of 2019 and all of 2020. But if you started in 2019, there are ways to take advantage of this. Good point.
And if you have any trouble with that, just jump on the store, hire us for a couple $100, and we'll help you figure it out.
That's right. DIYCFO.biz/store has a click and buy our help with your forgiveness calculation. It's a small flat fee for anybody. We will take care of soup to nuts to get your PPP forgiveness done for you. If you want to keep figuring it out yourself, here's some resources. It's sba.gov/PPP. Remember that at least 60% must be spent on payroll if you want to get forgiveness, and at most 40% on rent, utilities, mortgage interest, and these new things, which are operational costs, which according to the SBA includes HR and accounting needs, including software. We don't know anything more than what I just told you. So I really hate to even discuss this, but if you need to find additional costs in order to qualify for full forgiveness, operating costs, including software licenses, are clearly eligible, and maybe consulting and fees that you pay to absolutely necessary vendors like your HR and accountant might qualify. Supplier costs, the SBA literally called this a catch-all this morning, which I couldn't believe. And it does certainly includes purchase orders that you've put in prior to COVID, or perishables that you've purchased even during COVID, during the covered period of the PPP loan. If you are a restaurant and you're ordering food, somehow you can claim the perishable costs of the food. I don't know whether that means only the food that perished or all of it. It's quite a gray area right now. So
I'm pretty sure the intent here was that you made purchase commitments prior to being shut down. You got shut down, that stuff was lost or spoiled or something. I'm
right.
pretty sure that's how it's intended to be interpreted.
Yeah, I think you'd have to fight hard to justify these expenses. I don't think you can just grab a handful of invoices from vendors and call it a qualified expense. I think somebody's going to ask you to qualify those things, and you'd have to show that you bought 1,000 pounds of melon for the melon festival that was planned for June, and then it got canceled, and your melons rotted in the freezer, and you had to throw them out. Worker protection is simple. That's anything that you spent on personal protective equipment, masks, goggles, face masks, plexiglass, any kind of repairs you did in your office to improve ventilation, etc. And property damage specific to the social unrest that we had. So Black Lives Matter riots, or I don't know, maybe even the storming of the Capitol. If your business was interrupted by the storming of the Capitol and you had damage not covered by insurance, property damage not covered by insurance, that is a qualified expense. And the SBA was laughing at this rule today. They didn't believe that it would be that important. But I've talked to lots of people who could not open their business because the riots in various cities had trashed their, in the case I'm thinking of, it was a 7-Eleven store. So, I mean, I think this is real stuff. And there are people who didn't even have payroll expenses that they could claim because they had to close because of property damage. So this is actually a big news and a good move for them. Last thing is a timeline. And so any of you who have a PPP loan, if you have not yet filed forgiveness, this is the way it works. The first day is the day the money goes into your bank account. That's day number one. You start the clock ticking. Within 24 weeks, which by the way is about 6 months, you have to have spent the money, right? You can spend it in any amount of time prior to that, but at the end of 24 weeks, you have to have spent the money. You then have 10 months before your payments begin. And this is the get ready period. I've got the bracket around, right? Get ready, get all your information together, be ready to submit. And even when you're ready, then submit for forgiveness, because payments will begin after month 16. That's 24 weeks plus 6 months. And finally, if you haven't submitted forgiveness by the maturity date of your loan, then you've missed out, and you will have paid the loan off, and money will be gone, and you can't get it back after that point. So this is meant to show you there's no rush right now. We are somewhere in between month 7 and 16 for the PPP1. And of course, we're only in week 1 of the PPP2. So you got 16 months from the day that you get the money before you have to start making payments. And that's what's important to remember. Okay, one more time. I am David at DIYCFO.biz. Steve and I are DIYCFO.biz. We're in Charlotte, North Carolina. We have a team of finance professionals, including CPAs and CFOs. We provide CFO on-demand services, daily and weekly and monthly bookkeeping, especially in QuickBooks, and all of the government stimulus answers that you could ever want, including help with your PPP loan application, your PPP Forgiveness application, your ERC employee retention credit application, and I hope that we will try to stay involved with as many of the new programs as we possibly can. So we burned 45 minutes, a little longer than I expected, Steve, but would you like to jump into some questions here? We can do that. Why don't I'm going to jet back to the top of the list. Some people have been waiting a long time. All right, so Anonymous gave us this long one. He says, a partnership received the PPP but did not include partners' compensation. How is the covered period calculated? Well, your covered period is always calculated as day number one being the day you received the money, and the last day of the covered period is 24 weeks later, or whenever you say it is. So could the company claim an employee retention tax credit for the period between the initial fund disbursement and the loan increase, as long as it is qualified? It received a PPP loan increase. Okay, so yes, you know, this is a good example of my favorite word. Steve, do you know what my favorite word is?
Oh, not fungibility.
Fungibility. I really try hard to put the fun into fungibility. Fungible means that money is money is money, and if I have a stack of $1 bills and I give them to you, and Steve has a stack of $1 bills and he gives them to you, and you put them in a hat and you shake them up, or you put them in your bank account, and I ask for my $100 bill, my dollar bill back, you have no idea which dollar bill it is. Once it's in the bank, it's all the same. You just give me $1. So the point here is, if you used a certain amount of money for the PPP, for qualified payroll expenses for the PPP, that's PPP money. I don't care what day it was, or which account you drew it from, or whether you can trace it back to the day you got your PPP loan. None of that matters. What matters is there is a dollar amount that you associated with PPP and a separate dollar amount that you can associate with ERC. And when you add those together, you don't exceed the total amount that you spent, because you can't claim the same dollar twice. It has to be in one bucket or the other. Okay. All right. So that's
David,
yeah.
Let's jump back to the first part of that question for a second, because it's a real pain teaser for which I think there probably is no answer at the moment.
Yeah.
So you got the PPP first draw many months ago. That covered period is almost certainly over. Now these PPP first draw loan increases become available. You get that money tomorrow. What happens to the covered period? And so does the 24 weeks start again, or? And
yeah, it's got to, don't you think? If you really did a PPP,
that's exactly what I think.
Yeah.
Because they are first draw loan increases, right? It's part of the first draw loan. I think the whole work starts over again, but I think it's likely to be many weeks before we get a clear answer on that.
Right. And Anonymous, I would be surprised if you actually have a PPP 1 increase. Most people are not doing that because the amount is small. It's available. There's a law that says you can go back and get a first loan increase. We think the clock will start ticking again and start over again. But most people are going for the PPP 2, which of course is bigger if you qualify. All right.
And then the last part of his question there, I think that's an easy one. Can we apply for the increase and the second draw at the same time? I think that's a clear no, because you need to have spent all of the first draw money before you apply for the second draw. So I think that's why pretty consistently our thinking has been, unless it's really substantial, don't bother with the first draw loan increase, just go right to the second draw.
Great answer. Thank you for catching that. I completely missed it. All right, Luis asks, are owner payroll taxes able to be used as an expense for the PPP loan? Luis, payroll taxes are tricky. The only payroll that's available, or the only tax that is a qualified expense, is state and local tax. And it does not matter whose wages that was paid on. If you paid SUTA, state unemployment taxes, then those do qualify. But Other payroll taxes don't qualify. And one reason for that is the employee, and we're talking about PPP loans here, when the employees get paid, you pay them with gross wages. That's your expense. Payroll taxes are taken out of their payroll, but that's after you've spent the money. You gave them gross wages, and that's your expense. Add on top of gross wages, SUTA and local taxes, and that's all. Gary says, for the second draw application, it's asking for 2019 number of employees. Is that a raw number or is it FTE? That's a great question, Gary. We believe when it says number of employees, it always means a head count, raw number of employees. And there's 2 or 3 places it asks for number of employees. When it wants to know FTEs, it uses the term, the SBA always uses the term FTEs. And by the way, Steve, did you notice that the PPP loan uses a 30-hour work week for FTEs and a 40-hour work week for the ERC tax credit? Sorry, 30 hours for PPP and 40 hours for ERC. Did you notice that?
No, as a matter of fact, that's totally contrary to the original guidance on the original PPP loan, where we waited and waited and waited for clarification. And
I got it backwards, didn't I? I'm so sorry. 40 hours for PPP, 30 hours for ERC.
which is what we always expected in the beginning.
Yes,
in the
thank
30
you.
hours.
Yeah. See, this is why we do 2 guys on this thing, because it's too easy to misspeak about this stuff. 3-letter acronyms out my ears. Jason wants to know, do you have to go to a bank to get a PPP? The answer is yes, Jason. All PPP loans come from a lending institution of one kind or another. Steve Weissman, we qualify for the ERTC. So this is a retention tax credit. So we're waiting to apply for the PPP as long as possible to maximize our forgiveness on each option. If you were in our spot, when would you apply for PPP? Is there a way to request to receive the PPP funds around July 1st? Well, that's a different strategy, Steve. Steve Milan, what do you think about Steve Weissman's situation? Should he be waiting at all to apply for PPP?
No.
Not laughing at you, Steve Weissman. We're laughing with you, man. This is complicated stuff. I get it.
It has become increasingly complicated, and I think it's going to get even more so as the new stuff rolls out. But so my thinking is the PPP, and I guess it doesn't matter whether it's a first draw or a second draw, has a time expiration. Right now it's March 31st. There's a dollar expiration when the money's used up. So I think before anything else, and it's got the maximum benefit, right? The benefit is 100% of wages paid versus 50% or 70% for the ERC. But step one, I say take 10 minutes or call us up and have us run the calculation on what your PPP1 forgiveness is going to be, so you know where you stand. Apply for the PPP second draw, first draw, whatever it happens to be. Do that as soon as you can. Then apply for the ERC. And when all that is done, apply for forgiveness on your first draw loan.
Yeah. Yeah, that's a good process. We should write that down and patent that.
Or go to DIYCFO.biz/store and sign up for our forgiveness package.
There you go.
We'll help you dope out the strategy.
There you go. The link is on the screen there, DIYCFO.biz/store, and you'll see.
And that we should say that strategy process is part of what's included in that package.
Right. Sorry, let me share the screen again. So you got that link. There we go. Hey, my friend Arun Nagpal is on the line. Arun says, is the debt relief payment, is that automatic or do we have to call and request it? And when does it go into effect? So Arun, it was automatic last year. Anyone who had a 7A or 504 loan from the SBA were automatically given 5 or 6 payments. You didn't have to do anything except be sure that you got them, I guess, and complain if you didn't. This year, I think it will be similar.
It is supposed to be automatic again.
Yeah, I can't imagine they would want to do any kind of a sign up thing, but you should watch for it, of course, because have they announced the month they will be launching the first payment, Steve? Is it February or March maybe?
I don't know.
So the rule was started on February either 2 or 4. So I think that the first payments will be going out pretty quick. If you don't have a first payment by March 15, I'd start to ask some questions. Hope you're doing well, Arun. Thanks for the question. Cami says, has there been changes in the second round of PPP? We're profitable. Do we have the option to still apply for the second round? So Cami, I think we answered that, but again, to qualify for PPP2, you only have to show a decline in revenues. It doesn't have anything to do with profitability. It's just a decline in revenues of 25% in any one quarter. Okay. Jason, this is an unrelated question, but I love it. Jason King, thank you so much. Jason wants to know if DIY CFO will handle due diligence for M&A transactions. And I will say absolutely yes, Jason. We love helping entrepreneurs buy and sell their companies. We are not a broker. We're not even a full service investment bank, but we know an awful lot about the process, and we have helped dozens, maybe hundreds of entrepreneurs buy companies, do the due diligence on their target acquisitions, and figure out, do the modeling and the forecasting and the budgeting to figure out whether it's actually a good acquisition or not. So yeah, we'll be the buyer or the seller advocate, not an agent, but an advocate. Okay, Mike says, I received my first PPP and deposited it, and from there I paid my payroll and rent. Do I have to justify the funds used, and is this an allowable use? I'm not sure I understand that question, Mike. It sounds like you're doing everything right. You got your PPP, you deposited it, and you're using it for payroll and rent. I think you're done. Mark says, go ahead.
Eventually you're going to have to apply for forgiveness. And at the point that you do that, you're going to have to, depending on how big the loan is and which form you qualify for. But yes, at some point you're going to have to apply for forgiveness, right? It's not automatic.
That's right. Mark wants some clarification on when the 10-month period starts before forgiveness. So Mark, the 10 months starts on the 24th week. Technically, it starts after your covered period, but most people are going to take the 24-week covered period. So it begins on the first day of the 25th week, and it goes 10 months, and that's when your bank will require you to start making payments. That's the only thing that happens after that 10 months. It's really 16 months since you got the loan, and the only thing that happens is you start making payments. Thank you, Mark. Georgia, I keep getting errors on my application. What can I do? Georgia, there are so many issues with bank portals, and for everybody with banking questions, if you're having problems submitting your forms, if you're having problems even knowing whether your forms have been entered or accepted, or what the status is, or when maybe the bank's not even open yet, you are in good company, folks. This is a banking nightmare, and the only recourse you have is to keep emailing or calling your banker, to keep watching your bank website, hoping that they fix it. Try, maybe there's some technical problems on your end. I will say that I have, this morning I was helping a woman apply for forgiveness, and she had to switch browsers. Her bank portal just wasn't working with a Chrome browser, but when we launched a Internet Explorer browser, everything worked fine. So yay for Microsoft and boo for the banks. It's just a horrible situation to be in, trying to process 5 million of these loans, and your patience is requested and required to get through this. So thank you for that question, Georgia. Contact your bank and be patient.
But we might also say that you don't have to stick with the same bank, and there are non-bank lenders who are taking non-customer applications from non-customers. So I think it's good advice. Pick up the phone and call your banker.
Yeah.
If that doesn't work, think about applying somewhere else. And I don't know of any reason not to apply in multiple places.
Yeah. 2 quick questions from Victor and Jenny about the SVO. So take us all the way back to the beginning of our presentation about the Shuttered Venue Operator Grants. Jenny wants to know, what if your chairs are not actually bolted to the floor? And Victor wants to know if sole proprietors qualify if they are in the entertainment industry. And, I think both of you are in luck. It does say that your chairs should be affixed, But if you have a standing room only entertainment venue, nobody's going to come and look for whether your chairs are bolted, right? Take one chair and bolt it to the floor in the balcony and call it a shuttered venue operation. Obviously, you have live music and events. I'm sure you can qualify under one of those 5 or 6 categories. And Victor, if you're a sole proprietor but you own a shuttered venue, or you qualify as a talent agent and you just happen to be a sole proprietor, it seems to me that you would likely qualify. All of that said, the rules have not been written, guys. So those are David guesses. So far, the rules have not eliminated either one of you from consideration. So thank you for those questions. Richard wants to know, what periods can you take the ERC if you've received both PPP loans and they are expected to be forgiven? I'm going to talk about fungibility unless you stop me, Steve.
Oh, no, I'm going to talk about fungibility. The no clear rules. I mean, the correct answer is no clear rules have been issued. No clear guidance has been given about how to segregate which funds are being used for which purpose. So maybe your answer about fungibility is right.
That's
yeah. We're trying to be particularly careful to segregate by week. This payroll this week was being used for forgiveness. This payroll this week, the next week is being used for
ERC.
For ERC. But as far as we know, it's perfectly okay to use the gross dollar amount.
Yeah. Okay. Very good. Thank you, Richard. And so let's see. Gosh, have you heard about people pulling credit for PPP? Yes, it absolutely depends on your personal credit. Banks are allowed to make up whatever rules they want. For PPP 1, we heard maybe 620, 640 was kind of a minimum credit score. But again, each bank is on its own. I've learned some fintech companies are taking fees after the SBA has approved their loan. When borrowers question why they're charging these fees, they're told to take it or leave it. Is that legal? No, I can tell you definitively, no one is supposed to be making money on the loan application. Now, we can consult with you, we can charge you millions of dollars to give you the right answers, but we cannot make that contingent on getting the loan, and we cannot charge, we cannot do the loan for you. We, meaning any third party, cannot do the loan for you, and cannot charge you to actually apply for the loan, cannot broker the loan or anything else. That's a good question, Kendra. Thank you.
Back on the question about PPP credit, I think if you've been turned down at some bank on a PPP loan for credit, go somewhere else and try again.
Yeah.
It's not supposed to be. I mean, unlike the EIDL, which is absolutely borrower credit requirement, the PPP was not supposed to be. Our universal rule is banks can do whatever they want. I would just go somewhere else. Matter of fact, I would apply 3 or 4 places all at once, as long as you only take one of the loans, right?
Yeah. Okay, so related to this, Anonymous says, what about the hospitality industry? I own a hotel. Is there any particular rescue program for me? And although there's none that I know of, we should point out the difference for the PPP program, right? If you apply for a new PPP loan and you are a hotel or hospitality industry, you get 3.5 months worth of loan instead of 2.5 months for the rest of the world. Lots of people are asking for handouts of the slides. I will do something. I'll email everybody. You can always get copies of these slides in our resource center, which is available on the store. So DIYCFO.biz/store. If you sign up for the store, here's that link again. We always keep copies of our slides and recordings of our webinars and all of our information about PPP and other stimulus programs. We call it the Stimulus Resource Center for a while now. I think it's just the Resource Center. But anyway, there are amazing resources in that website that if you sign up and become a member, you get access to. You also get access to our private Facebook group and our Finance Friday webinars. We hold every Friday. We go through slides like these and more on Friday afternoons. and access to Steve and I whenever you need to. So thank you for that, for asking about that. Here's a good one. Sole proprietors. Do sole proprietors have to prove that their earnings were down by 25% in 2020 compared to 2019 in order to qualify for a PPP2? I know I should know the answer to that, Steve, but
Yes. Yeah.
You do have to prove that you had lower.
No, gross revenue, right? Not income.
Yeah.
But everybody's subject to the 25% decline in gross revenues for second draw loans, right?
Yeah. So Victor's question is, how does he prove that? Can he just print something out from QuickBooks?
Yes, I think that would be absolutely okay. Or they may ask for your bank statements, or
Oh, that's right. I forgot about bank statements. So Victor and everybody, this goes for sole proprietors and larger companies with employees. You can print out a statement, income statement from your accounting software that shows your revenues were down, your sales are down by 25%. To prove that, the bank is going to ask you to reconcile that to bank statements from 2019 and bank statements from 2020. And they're going to look for deposits. And those deposits are going to corroborate what you told them. And if you don't have any accounting statement or software, you can use just your bank statements and compare them to each other and say, you could go onto the 2019 bank statements and circle the deposits that represent income, and go on the 2020 and circle deposits that represent income and show them the difference. Yeah, that's what you're just going to have to do especially if you get a big loan. They're gonna look for that kind of stuff.
And the rest of the story for sole proprietors would be in calculating the loan amount. And officially what's being, because you're allowed to use either 2019 or 2020 wages to calculate the loan amount. And so for sole proprietors, that's line 31 on your Schedule C. So what they're asking you to do is just prepare a draft of your 2020 Schedule C and use that for your loan request.
Robert has an interesting question. He had 500 employees in 2020, but he has fallen below that number since. Do you think he can qualify based on the number of employees per quarter? Like at a given moment?
So would you imagine this is about PPP or ERC?
Oh, I'm sorry, ERC, for the Employee Retention Tax Credit. When do you measure the number of employees that you have to qualify yourself for Employee Retention Tax Credit as being at that 500 employee level or below?
I don't know.
941s actually list the employees by name, right? So maybe if you had fewer than 500 employees on a particular 941, that would get you over it.
Well, so Robert has a huge amount of money at stake, and they're, our partners would certainly know the answer. Your CPA may know the answer. So this is just a situation of needing to go to somebody who has done work with these ERC and the proper answer. There are all kinds of issues, right? People who have a large churn in their employees, who knows how many people they paid in a given quarter and how many were there at the beginning, how many were at the end. It's just not our area of maximum expertise right now.
Right. Yeah, very good. Here's my favorite question of the day from Bedar. Bedar says, could you repeat that again, please? I'm sorry, Bedar, I would love to. Okay, so here's what he really wants to know. 50% decline in which year? So that's about the ERC. You have to show a 50% decline in 2020 over 2019 on a quarter, any one quarter in 2020 over any one quarter in 2019. Gosh, I'm trying to pick some really good ones here. We're over our time, but I want to do 2 or 3 more fun questions. There's some really good ones in here. If we used your services for CFO, would that qualify as an expense for which these funds can be used? I think so. I think operating expenses, if accounting and CFO services were vital to your operation, I think you could make an argument for why you could include CFO services in your qualified expenses. You still have to have 60% payroll, but for the other 40%, they have talked about accounting and HR fees and software that is necessary to process your accounting and HR. So maybe, Randy, I appreciate the thought. Hard to say whether they would get past your particular bank or not. Anonymous asks about leasing employees and paying payroll that way. So that's a staffing company question. I think we just need to make a real big blanket statement here. Staffing companies, leased employees, and 1099ers are not employees. If you do not pay FICA and FUTA taxes on these people, then they are not employees and they do not qualify for any of the programs that we've been talking about. You will not get a PPP loan based on 1099ers. You will not get an ERC based on 1099ers or staffing companies or anything else.
Although, as you have pointed out before, co-employment is a different story, right?
Co-employment, that's right. A PEO, a professional employer organization like ADP or Paychex or Administaff or Insperity, that's a different deal. Those are employees, and you'll know if you have a PEO, you would know that, and you would know that those are employees. Gary says, what if I have a 50% revenue reduction in just one quarter, but none of the others? Can I still get the ERC for the wages in that quarter? And the answer is yes, Gary. Not only do you get the wages for that quarter, but also the following quarter automatically until the end of the quarter in which your revenue exceeds 80% of 2019 levels. I'm going to say that again. In the quarter you qualify, you can start counting your wages towards the ERC, and the following quarter, all the way to the end of any quarter in which your revenue exceeds 80% of 2019 levels. All right. Steve, we lost about 150 people at the turn of the hour here. How much longer you want to go?
How about two more questions?
Two more questions. All right. Is there a wage cap with ERC? I'm capped on the PPP at $100,000 a year. Can I use the excess for the ERC? Very interesting question. I hadn't framed it quite that way before. Go ahead, Steve. I'll find another question for you.
Well, wages per, and for the ERC, wages per employee, you're capped at $10,000. So if you weren't happy with PPP, you're going to be less happy with ERC.
Well, okay, but that wasn't his question. His question was, hey, I made $200,000 last year. PPP covered me for, in his words, PPP covered him for $100,000. You and I know that PPP actually only paid $20,000 of his pay.
Well, can he use the excess on his own? Then I think the answer is yes.
Yeah, the answer is yes, Ted, I'm sure, yeah. And that's a good point, because differentiate between the amount of payroll that you use to apply for the loan and the amount of payroll that you use to get forgiveness, right? You said I'm a $200,000 guy. That helped you get a bigger loan, but the loan was only, the PPP was only for $20,000 bucks. If you've been taking a $200,000 salary, there's plenty more for you to use to qualify for the ERC. And by the way, the ERC maxes out at $10,000 per person per quarter in 2021 with some weird things going on there that I won't talk about. My goodness. So let's see. Does a government, yeah, we talked about that. We're a family business that did not take any salary to keep going. Are we eligible even though we can't show salaries paid? Boy, that happened to so many people, May. So many people just cut paying, especially their own salaries during the pandemic. Steve, what's she supposed to do with that?
So is this question about second draw, you think?
Yeah, I think it would be second draw. So maybe you got a first draw, you still didn't take any salary for yourself, and now second draw, you don't have that salary base in 2020 to show to qualify.
So the good news is for the second draw, you have a choice whether to use your wages in 2019 or 2020. And so you can, whatever amount you got in 2019, you absolutely can apply and get that again, regardless of whether you paid yourself W-2 wages in 2020. And of course, depending on the structure of the business, right, whether it's sole proprietor, LLC, or corporation, or.
All right. Well, those were your two. I see some more in here that I might like to talk about. Like, everybody wants to know how to get a copy of these slides. So let's say again, if you go to the DIY store, the link that's on your screen now, and you join the Resource Center, a recording of this will absolutely be in the Resource Center along with our slides. Separately, I always put the movie recording in one thing, and then I attach the slides as a PDF, so you can have that. And if you have questions that have not been able to get answered today and you want to email David at diycfo.biz, I will sure try my best to do that. Oh, here's a good one. Last one. Is there a deadline for applying for an ERC retroactively to 2020? I think that it's 18 months. That you have 18 months to file an amended 941 form. Have you seen anything else on that, Steve?
I have not.
All right. Hey, with that, let's wrap up. I'm getting hoarse, and we will be back here in another few weeks. We'll keep these webinars going every 2, 3, 4 weeks. We'll have one of these like this. And meanwhile, if you want it more often, you can join our Resource Center. All members of our Resource Center, all customers who buy any of our services are invited to join our Finance Friday, which happens every Friday afternoon, actually every Friday noon Eastern time. And we do a presentation like this, and then we send the slides around to everybody who wants them, and offer our in-person services. And of course, those webinars are only 40, 50, 60 people. So there's lots of opportunity to ask questions and get some personal one-on-one time with the brain of Steve Milan and David Worrell. All right, thank you to everybody. Thank you, Steve Milan. We'll see you in a few weeks.
And thanks everybody for attending. Thanks for your questions. Really helps us to continue to learn. Thank you so much.
All righty, bye.